Everyone, in the new year, buy a house. I don't care if it's your primary residence, a second home, investment property, buy a house in the new year. If you have been waiting to purchase a home, the upcoming year may be the perfect time to do so. I know a lot of people have been like patiently waiting. It just may be well worth the wait. What's happening is the rising mortgage rates are finally taking a toll on the home sales market. So if you have been waiting to get in on the American dream of home ownership, you may not have to wait much longer. The slowing effect on the housing market of the higher mortgage rate environment has been largely predictable. Okay, this has been predictable for a while now, and home prices appear to be trending downwards finally. And this is actually a good thing, not only for those who seek to buy a home, but it is also a good thing for those who are trying to sell a home, because with the rates being so high, people have like basically stopped buying homes. But we are like approaching, that balance in the housing market, which is actually great for both the seller and the buyer. So, how low can we expect the home prices to drop in the upcoming year? About 1.5%. So if a house sells for $250,000 right now, in the upcoming year, you can expect that house to go for about $246,000. So a lot of people still have the mindset anticipating that we're going to see low mortgage rates like we did in 2006 and 2008. Well, that's not going to happen because we're in a different environment. We're not in that same type of environment. That was a very unique, very unusual situation that occurred, okay? So this is a new market. Now you will see prices decrease, but you're not going to see those basement bargain prices. And there are many factors for that being the reason. Number one, the type of mortgages that were like very that they used a lot back then, like adjustable rate mortgages, teaser rates, and you know, exotic mortgages. Those type of products are rarely used. They are so far and in between. And it was those type of mortgages that caused the problem that happened in 2008. That was the reason why we had so many foreclosures. A lot of people were given adjustable rate mortgages that didn't need to be an adjustable rate mortgage. Um, Adjustable rate mortgages were attractive because the monthly payments started off low because the interest rate was really, really low. So if you were someone and you didn't make a lot of money, this was like your opportunity, so you thought, to get into a home. But a lot of those people that had those adjustable rate mortgages, they did not have money set aside. They did not have that cushion um, put away for when the rates increase. And when those rates increase, then those people who didn't have a high income and they thought they were buying into the American dream, it was really just an American illusion because they didn't have that money set aside to offset those increasing interest rate of the adjustable rate mortgages. Another reason why we're not going to see the prices that we saw between 2006 and 2008, we're not going to see those basement bargain prices because things have changed, right? Like underwriting standards have changed. Back in the day, underwriting standards were not as tight as they are. Trust me, I work in the mortgage industry, and people that are getting homes today, these are people who can actually afford the home. And the reason why is because they are checking credit, they are verifying income and assets. 10 plus years ago, you could say you made $75,000 and go out and get a $250,000 home. Well, no, you have to provide information proving that you work for this company, how long, and if you recently switched a job, you're gonna also it depends on, like, if you've been a teacher for 2 years and for a month now you have been a nurse, well, that may impact if you can get a loan or not, depending on the type of program that the loan officer enrolls you in, because some programs, they're okay with you switching jobs, but they want to make sure that the work is in the same field, because if it's not in the same field and you haven't been on that job for a long period of time, then you're actually considered to be a risk. So things have changed. Like I said, this is a new industry that we're in. It's not the same industry as before. Prices are going down, which is great, but do not expect to see those basement bargain prices that we saw in 2006 and 2008. So if you're someone, you work in the mortgage industry, or if you just love mortgages, you are a home buyer, you are a home seller, this is definitely a channel that you want to subscribe to, because I'm going to drop videos every day about a topic in the mortgage industry. Until next time.